Hey, what's up traders? If you want to take your trading profits to the next level or haven't been able to profit while trading and want to learn how to make money from the markets consistently, then you need to watch this video. A strategy is crucial for making money while trading, and the one I'm about to show you works for all types of traders and on different time frames as well. Now, I personally love to use this for stocks and crypto, but we've seen plenty of success with the strategy in the Forex markets as well. So before we get into it, it's important to know that markets move sideways or consolidate about 70 to 90% of the time, depending on which market you're looking at. And the other 10 to 30% of the time, the markets trend up or down in price. So by positioning yourself before these trends occur is exactly how you can start significantly increasing your win rate, your risk to reward ratio, and ultimately leading you to making more money while trading. Now, really quickly, for those of you who don't know what consolidation is, it's a time when the price of an asset stays within a certain range. Think of it as a breather for the asset after it has made some significant price moves. During consolidation, the market is indecisive and the price is moving sideways. However, this presents a great opportunity for traders to find good entry and exit points before the next big price move happens. And this strategy is going to show you exactly how to spot signs that indicate the end of consolidation and the start of a breakout. So if you've been struggling with inconsistent results or frustrated with market fluctuation, then stick around as I'll be getting into some setups right now. So here's an example of a trade using this strategy. We're looking at the Bitcoin on the 15-minute chart. Our last signal was a buy signal, and we can see we have bullish momentum building up on the Shark Oscillator down here. Once we see this blue dot, it means I want to enter the trade in the direction of the momentum, which led to a profitable trade, as you can see. Then you can see we consolidated and the price moved sideways once again before it makes its next explosive move. Now let's fast forward until we see the next blue dot appear. We can see the price remains within this range, so we're not entering any trades yet until we get confirmation from our blue dot on the Shark Oscillator below. Now, once we've got the trigger, we enter the trade, set our stop loss at the last swing low, and aim for a risk to reward ratio for anywhere between 1 to 3, or you can manually exit the trade based on the oscillator. As you guys can see, this was another profitable trade. And by the way, there are other ways to set your profit targets and stop losses and when to re-enter a trade. I'll share more details on trade management at the end of the video. Although right now, let me explain more on how you can use the Shark Oscillator to get an edge in the market the same way that we do. The Shark Oscillator is a powerful tool in this strategy. It helps us identify momentum strength, weakness, and volatility in the market, providing valuable insights for making informed trading decisions. The oscillator consists of two main components, the momentum histogram and the volatility dots that you see right across over here. These components work together to provide a comprehensive view of market dynamics. Let's start with the momentum histogram. It represents the strength and direction of momentum in the market. When you see the histogram bars above the zero line, it indicates positive momentum, suggesting potential long trade opportunities. Conversely, when the bars are below the zero line, it indicates negative momentum, signaling potential short trade opportunities. Color-coded bars make it easy to interpret. Green bars above zero and red bars below zero. But the Shark Oscillator goes beyond just identifying momentum direction. It also helps us gauge momentum strength and weakness. As the histogram bars approach the zero line, it signifies a potential weakening of momentum. If the bars are approaching the zero line from the positive side, above zero, it suggests that bullish momentum is losing strength. Now, on the other hand, if the bars are approaching the zero line from the negative side, below zero, it indicates weakening bearish momentum. This information can be valuable for adjusting trading strategies or considering potential exit points. The Shark Oscillator's dots show market volatility. Red dots mean low volatility, indicating a stable market. Blue dots mean price expansion and potential breakout. Consolidation periods often lead to breakouts or increased volatility. Observing red dots alerts traders to potential breakouts. This helps them prepare for volatile price movements and adjust their strategies. So let's review the guidelines for entering a trade using this strategy. First thing, you want to identify the areas of price compression. You can easily find this by looking for red dots on a Shark Oscillator below over here. And remember, price moves sideways or compresses before it has explosive movements. Additionally, you can draw up the candle zones yourself or go to Shark Algo settings right up here, go to consolidation zones and turn that feature on right there. Next, you want to identify the current trend and momentum strength or weakness. I like to use the fast trend cloud for the strategy, so simply go to your settings and turn that on. Right over here. Perfect, hit OK. Now remember, the more confirmations we have, the higher probability the trade will go in our direction. And on the Shark Oscillator, you can also see the divergences, which indicate a potential strong momentum shift and high probability of reversal. This is additional confirmation. Since we've identified the trend is bearish and the momentum is bearish, we can either enter the trade based on the last signal generated or wait for a blue dot to appear on the oscillator below. Once these conditions align, you can consider entering a trade. I like to set my stop loss at the most recent swing point, in this case above the consolidation zone. And in some cases, this may be quite large as you can see, so you can consider placing it near the break of the consolidation zone. And my profit targets are either 1 to 3 times my risk when I'm using this strategy. There are some details that can be adjusted for each individual trader, so here are some things you want to consider. The timing of entry varies among traders. Some enter after seeing the first bar, while others wait for confirmation from 1 or 2 bars. Ultimately, the choice of when to enter the trade is something you'll need to determine based on your own preferences and risk tolerance. As for exit strategy, you can also set a trailing stop loss so you can stay in the trade longer to maximize your profits. Now, before I let you go, make sure you hit that like button, leave a comment below letting us know which markets you like to use this strategy with, on what time frames. I love using it, trading Bitcoin and cryptocurrency. Now, if you have any questions whatsoever, make sure you leave a comment below, like I said, and subscribe for more content like this. We'll see you in another video.